What's going on, everybody? This is Jeremy Scott. We're going to change it up a little bit this week. We definitely have some flip stuff coming, but I'm going to actively debate artificial intelligence. We've been using them like crazy every now and then on whatever we can, whether it's comedy. We even had to write country songs the other day that were about Texas Tech and A&M, and they were incredible. But without further ado, there's a robot sitting next to me, and we're going to debate. So, first question I have as we begin. Mr. Artificial Intelligence, if I'm not mistaken, his name is Alex. How do you anticipate the upcoming real estate market in regards to the economic outlook?
As an AI language model, I don't have the ability to predict the future with certainty. However, based on the current economic conditions and trends, it is expected that the real estate market will continue to be affected by the pandemic and the resulting economic slowdown. The low interest rates may provide some support to the real estate market, but the uncertainty and economic challenges faced by many potential buyers and sellers may lead to a decrease in demand and supply. Additionally, the impact of remote work and changing lifestyle preferences may also have an impact on the real estate market in the coming years.
I get it. It does sound a little doom and gloomy, like you've been programmed by the left, but if supply decreases, the laws of economics, prices go up. So now we have low in inventory. Admittedly, you had said that there's low inventory, which there is. That's the biggest thing. Everybody wants 2008 to happen again. We had a massive influx of inventory. But in my opinion, as long as the inventory stays tight, I see the real estate market staying, healthy. Not necessarily a massive pullback, but a comfortable pullback. If rates continue to rise, then yeah, we're going to continue to have a drop in real estate pricing. So, what are your thoughts on that?
You are correct that the laws of supply and demand can have an impact on the real estate market. If the supply of homes decreases while demand remains constant or increases, then yes, prices may increase. While low inventory can create a sense of urgency among buyers and potentially drive up prices, it's important to consider the broader context. For example, if unemployment remains high and the economy struggles to recover, then fewer people may be able to afford homes, which could lead to a decrease in demand. Similarly, if interest rates rise, it could make mortgages more expensive and discourage potential buyers. It's also worth noting that the pandemic has caused a shift in lifestyle preferences and work patterns, which could have long-term effects on the real estate market.
I mean, I definitely understand that. Like, it makes sense. But if you think about it, like, let's see, at the same time, I mean, the pandemic's really the shifts it had is people were buying and upgrading to better houses because they were working from home, had a place where they wanted to stay. And then if you think about it, unemployment is supposed to be driven up to curb inflation. So it's kind of like a trade-off there. But if inflation is curbed, which it is, and unemployment is going up because that's the goal, and they're laying everybody off because all this is designed AI. But that definitely would make a factor. And you mentioned the pandemic, so let's talk about that a little bit more. In my opinion, another pandemic would have a cause and effect for sure, and it had here. Well, I think we've learned a lot, but I do think people have wisened up through that situation and aren't going to fall through that again. And really, all that the pandemic did was tighten up inventory. I think that part kind of backfired. If our overlords that created you were trying to cripple the real estate economy, I can tell you right now how to do it. Is if you incentivize builders as a government and you're paying the builders stipends that are taxpayer funded and they overinflate the inventory, that plus allowing non-qualified buyers to come in, that's going to flood the market with inventory. But we're still carrying a massive backlog of pandemic stuff. So I do agree with you on that. What are your thoughts on that?
That's a valid point. The pandemic has led to a shift in lifestyle and work preferences, and many people are looking for more space and comfortable home environments. This could potentially increase demand for larger homes or properties with outdoor space, and as a result, positively impact the real estate market. Additionally, low interest rates may also incentivize potential buyers to enter the market, which could help boost the market as well. It will be interesting to see how the market evolves in the coming months and years, and whether the pandemic will have a lasting impact on the real estate industry.
That's true. For me, it's not a matter of if it's a matter of when the next pandemic is created. Comes along, and so when that happens, and my question to you is, what is that going to look like with the real estate market, and how does an investor profit?
It's difficult to predict the future impact of a hypothetical future pandemic on the real estate market.
Speculators.
However, based on the experience of the current pandemic, it's possible that the real estate market may face some challenges in the event of another pandemic. In terms of how an investor can profit in such a scenario, it's important to note that real estate investment is a long-term strategy, and that short-term fluctuations in the market should not be the sole determining factor for investment decisions. During times of uncertainty, investors should focus on diversifying their portfolios and identifying opportunities that provide a stable source of rental income, as well as potential for long-term appreciation. This may involve investing in properties that are well located, have strong fundamentals, and that meet the needs of tenants in a changing economic and social landscape.
AI is pretty smart. It's crazy because they just come up with this on the spot. Excellent point. Long term is the right mindset for sure, especially when it comes to investing. In my opinion, the states that continue freedom are going to have less repercussions and whatnot, kind of like we saw in the last one. That's what I learned from it. And then somebody like Los Angeles, they're shut down the most, and we're shut down for the longest. They've had the biggest effects of anyone. So I do think that definitely will play a factor in that. What do you think?
Yes, you are correct. The pandemic has had a differential impact on different regions and cities, and the real estate market is no exception. The areas that have been less impacted by the pandemic and where the governments have taken a more lenient approach may have a better outlook for the real estate market. On the other hand, areas that have been hit hard by the pandemic and have had stricter lockdown measures may experience more challenges in the real estate market. However, it is important to note that real estate markets are complex and affected by many factors beyond just the pandemic and governmental policies. Factors such as demographic changes, interest rates, and employment rates also play a significant role in shaping the real estate market.
Very true. Very true. What type of real estate would you buy? AI.
As an AI language model, I don't have the ability to buy real estate or make investment decisions. Some factors to consider when making a decision include the potential for appreciation, rental income, cash flow, and the overall economic conditions in the area. It is recommended to consult with a real estate professional or financial advisor who can provide personalized advice based on your specific situation and goals.
Extremely safe and politically correct answer. Your last final words of wisdom for us, because you haven't been as argumentative as I would have liked, but you got good advice. Final words of wisdom.
My final words of wisdom would be that in times of uncertainty and rapid change, it's important to remain flexible and adaptable. This applies not only to the real estate market, but to all aspects of life. It's also important to stay informed and up to date on economic and market trends to make informed decisions. Finally, remember that the real estate market is cyclical, and while there may be challenging times, there will also be opportunities for growth and investment in the future.
Well, AI, I appreciate you for your time. I feel a lot more comfortable after discussing with you the future of humanity and American real estate outlook. Well, that sums it up. We just debated AI. Sounds like they're actually on the same page as us. We see the market going pretty strong. Inventory is tightening up, or still tight, even with more homes coming on. What I'm seeing, and just like AI agreed with, is the artificial intelligence. What am I talking about? The interest rates, the artificial propping up of the interest rates is what's hurting, sales prices and whatnot. So if they do continue to do that, yeah, it'll hurt. But we haven't done one in a minute, and things are definitely inflation is cooling. I would not be surprised if next year they started lowering interest rates artificially, because they just prop it up, manipulate it, the whole time. And it's how the system's designed. But anyway, that's it. Decided to mix it up. Hopefully you like it. Go subscribe to us on YouTube. Thanks for watching.